Okay, everyone, we've saved the best for last in some ways. She's a very interesting and exciting gal. I met her first when she had a number of years as the group CFO for Alpha Land and related companies within Alpha Land. She had a very exciting time, I would think, working for a person who's described as controversial. Bobby Ongpin here, if you don't know, ask your person sitting beside you in these stories, but quite an interesting and entrepreneurial fellow and an entrepreneurial organization. And they did a lot of good things, and also some bumps in the road also. But she then, like our last speaker Martin said, ended up working for DoubleDragon Properties, which is a firm created by two of the country's most successful entrepreneurs. One is Tony Tan of the Jollibee organization, who, if you spent more than 5 minutes in the Philippines, have seen a Jollibee somewhere. And the other one is a younger fellow, Injap, I believe is his name, who started the Mang Inasal chain. And then when it was acquired by the Jollibee organization, the two of them then joined together to form this organization. So they've become quite an exciting real estate group. And yeah, Hannah Yulo has been hired as their chief investment officer, and they've got tremendous plans in place. Something like 700 million, 700,000 square meters of real estate being planned across the country. And so quite a story. So let's hear from Hannah Yulo, Chief Investment Officer of DoubleDragon Properties, to hear her story. She's also, I would say, one of the youngest, and dare I say, the most attractive CFO I've ever seen in my life.
Thank you. Hi, good afternoon, everyone. I hope you've had enough coffee during the break. I always say I don't have any issues with caffeine, but I do have issues without it. So I'd like to thank Richard first, and of course the lovely Rebecca, for inviting me to speak in this forum today. And I'd also like to congratulate the Asia CEO Forum for organizing such a well-attended event. It's quite an honor for me to be speaking alongside such esteemed resources in the industry. My name is Hannah Yulo, and I'm the Chief Investment Officer of DoubleDragon Properties. We are a relatively young property company. Many of you may have heard of our successful IPO in the Philippine Stock Exchange last year, which was 14 times oversubscribed. DoubleDragon is led by visionaries in Sia, better known for his successful Mang Inasal story, and of course Tony Tan Kap Chong, the founder of the Jollibee Group. And we have a clear vision of accumulating 1 million square meters of leasable space by 2020, largely through the build-out of 100 city malls over the next 5 years. And this should rank us as one of the top 5 property development companies in the country once our targets have been achieved. So you may say that we're ambitious. Some may say that we're even very aggressive. But today I will talk about the risks and opportunities in the Philippine real estate industry and how a fast-growing company such as DoubleDragon is able to manage growth plans wisely. So, as Martin was saying, that's the negative thing about speaking last. Everybody's said it all already. And I believe Lindsay shared a lot of the data on the real estate sector earlier today, and fears of a bubble and whatnot. So please bear with me as I touch on the subject just a little bit more due to its extreme relevance in our business. So when you start seeing Fort Bonifacio property sales logging a record high 500,000 per square meter, almost double from the previous year, you start to ask yourself, when will this unquenchable demand lose its steam? We live in one of the fastest growing economies in Asia. second only to China in terms of GDP growth. Sure, our economy is growing over 6%, while property prices are probably growing at a far faster pace. But you have to look at how relatively undervalued our capital values are in this country versus Asian peers, which is why we continue to see strong demand for property from the international market. Up to 20% of luxury properties sold go to the international market. And I'm not talking about just OFWs. I'm talking about Hong Kong expats, Singaporean businessmen, and we also see a lot of Japanese bulk resellers. The reason is simple. As of late last year, the Philippine Property Industry Exhibit revealed that the Philippines offers the highest rental yield in Asia, beating Hong Kong and even India. Regional investors are diversifying their portfolios, and I believe that this will be even more prevalent in the coming years, especially with the ASEAN integration. So I also have some charts which I pulled out from Collier's knowledge report. I'd like to highlight some of these just key data. Firstly, we're seeing stable growth in land values in Metro Manila, with the Makati and Ortigas areas only now returning to its pre-crisis levels, 97, 98. If you have a look at these charts, you won't see the same indications or the abrupt rise in land values as you would have seen prior to the crisis. What you see in the recent years is a steady but uphill climb to recovery. Last year, land values in these prime cities increased 6 to 7% year on year, pretty much in line with GDP growth, which is a good indication of stability in these areas. It's no wonder that these areas remain so attractive to investors, because in addition to stable land appreciation, you're also seeing high rental yields at par or slightly higher levels, which produce steady cash flow for buyers. According to the Collier's knowledge report, land values are expected to continue to grow between 6 to 8% in the next 12 months. Secondly, even residential condominium capital values, despite the influx of supply, continue to see consistent growth year on year. When you take a look at residential condominiums in the prime areas of Fort Bonifacio, Makati, Rockwell, you'll see a very steady growth, albeit slightly toned down at about 5 to 6%, attributable to the growing residential condominium supply. It's still comforting, though, that despite seeing all the new developments rise left and right, that there's still demand that's absorbing all these units in the market. We see steady appreciation on top of rental yields. And Colliers also indicates that about 31,000 residential units will be delivered in the major districts in Metro Manila over the next 4 years. 40% of this are scheduled for completion within this year. 75% of this are studios, one-bedrooms, mostly catering to the young professionals as the BPO industry remains robust and people strive to improve their lifestyles by residing closer to their workplaces. Of all segments, though, it's the luxury residential condominium segment in Makati which remains the most impressive, with vacancy rates floating at only 4% versus 8% in the other areas. Thirdly, office vacancies remain low, as Lindsay also mentioned earlier. It indicates growing demand for additional space as businesses expand and international companies set up shop in the Philippines. The office sector is still the most wanted asset class, with robust rental growth due to the high take-up from the BPO industry. Growth in the office sector will continue to outrun the residential condominium market, with free trade opening up in Asia. There are several emerging districts rising in the near future, most anticipated of which is the Big City, which is why DoubleDragon has positioned DD Meridian Park, its largest standalone project, in a 4.8 hectare property located in Pasay City's Bay Area. And I'll talk more about this later. But before then, I'll talk about a little bit about the retail property market, which is the real focus of DoubleDragon. The retail industry in the Philippines is one of the key growth markets in Asia Pacific, alongside major cities in Vietnam, Malaysia, and Indonesia. In the Philippines, as Martin mentioned, 60 to 70% of the over 272 billion US dollar GDP is driven by private consumption. And as GDP continues to grow, so does consumer spending. The Asian Development Bank forecasts GDP will grow 6.4% in 2015 and 6.3% in 2016. And retailers, both local and foreign, are starting to recognize how irresistible this opportunity truly is. Last year, we saw 250 new international entrants in brick and mortar retail. ADB also expects inflation to slow to an average of 2.8% this year, largely due to lower fuel prices. Unemployment has fallen to 6.6% in January of this year, the lowest it has ever been in 10 years. So these positive economic indicators are key ingredients to really a sustained retail boom in the country. Now I want to talk briefly about the company that I work for, starting with the amazing people behind it. I feel incredibly lucky to be working alongside such strong leadership as the powered team of these two dragons, only 24 years apart. So on the left side, that's Injap Sia, probably better known as the guy behind the success story of chicken barbecue chain Mang Inasal, which has about 456 branches nationwide today. 12 years ago, at the young age of 26, Injap followed his gut feeling in starting a fast food chain that was distinctly Filipino, uninfluenced by American cuisine. 7 years later, Mang Inasal had overtaken McDonald's in the country. He had built 338 stores in 7 years. And it was at this point that Jollibee bought 70% of the company for a whopping 3 billion pesos. As advised, of course, by Fortune Klein. Where's Martin? I think Martin had something to do with the 3 billion peso price tag. So overnight, Injap became the youngest of the top 40 Philippines' wealthiest people. And it was obviously a very good deal for both parties because only 2 years later, Tony Tan Kak Chong, the chairman of the Jollibee Group, wanted to partner with Injap again, and this time in property development, which is how DoubleDragon was born. Now, Tony Tan Kak Chong is our co-chairman, and I don't think he really needs an introduction, but I'd like to say that his story is similar to that of Injap, as he also started his first business, 2 Magnolia ice cream parlors, with his family savings when he was only in his early 20s. How a 350,000 peso investment in a couple of ice cream parlors transforms into a listed fast food giant with market cap of 227 billion in just 40 years is truly awe-inspiring for me. This synergy and impeccable reputation of these two men are the reason that DoubleDragon IPO was 14 times oversubscribed, and why today, only a year after our listing, our share price is trading at over quadruple the IPO price. So one of the unique features of our company is really in having a clear vision of where we want to be in 5 years. We will build 1 million square meters of leasable space in our portfolio by 2020. And I don't think it can get any clearer than that. 70% of this will be coming from the rollout of 100 city malls, which is the 700,000 square meters I was mentioning. We account, according to those statistics, we account for 70% of the expected supply in provincial retail space over the next 5 years. City Mall is envisioned to be the first and largest independent community mall chain in the Philippines, and we have the first mover advantage. Although there's quite a number following suit, we have been able to secure 20 out of the 100 mall sites that we are building in the next 5 years. We're currently securing 1 to 2 hectare prime commercial space in the provinces, and that's really our focus. We have a few in Metro Manila, but most of this will really be in the Visayas, Mindanao region and in Northern Luzon. So we are acquiring this very central spots of these provinces. So once you're in, and these are very few and far between, 1 to 2 hectares you can find right in the heart of the city. So basically what we're doing is edging competitors away from these cities, so they won't have much choice but to locate further down the road from us. Mind you, each of these small sites are meticulously chosen by our chairman in Sia, who has successfully rolled out the 338 branches in the first 7 years of his career. But the real gem behind this strategy of rolling out community malls is that before we even open the mall, we are substantially tenanted. Between the SM Group and the Jollibee Group brands, of which we share the same common shareholders, our malls are actually pretty full. So there's really very little risk for us in rolling out 100 malls. We are also tying up with a lot of retailers that are prepared to open 100 stores across the country with us. So all it is really is a test of time for us, and in choosing the right location for each of these small sites to ensure the profitability of our tenants. And in our effort for caring for the environment, each city mall will be green-energized and installed with solar panels and rainwater harvesting. To substantially complete the remaining balance to reach our target of 1 million square meters, we have also entered into a joint venture covering a 4.8 hectare prime commercial land in the Bay Area, Pasay City. DD Meridian Park sits in the corners of EDSA Extension, Rojas Boulevard, and Justado Macapagal Boulevard. So it's on your left side before you get to Mall of Asia if you're coming from Makati. So this project will feature a massive commercial compound for BPOs and corporate offices, and we have some areas allotted for future development as well. Phase 1, which is DoubleDragon Plaza, is an 11-story complex which will have commercial spaces in the ground floor and BPO towers above. This will be about 9 hectares of leasable space, which is expected to come into the market by 2018, and we will be housing over 12,000 BPO workers in this phase 1 of this project. We intend to secure LEED certification, which means our building will save our tenants money and resources and have a positive impact on the general health of occupants, while once again promoting renewable and clean energy. Once the 4.8 hectare property is completed, DD Meridian Park is expected to have a total gross floor area of 33.4 hectares and generate over 1.6 billion in annual rental revenues for the company. Here's just a general overview of some of the projects we have in the pipeline today. The Sky Suites is a commercial office and residential complex on EDSA and Quezon Avenue, and we have about 1,000 loft residential units there. We have a commercial tower on one side with the corporate offices. 70% of these units are already sold, so we're actually very limited in our exposure in the vertical residential condominium market. We'll also be completing this project in 2018. And in the middle there, that's W.H. Taft Residences, which is actually, this particular tower is within the LaSalle complex. It's wrapped around, I mean, the LaSalle complex basically hugs the entire tower. So it's the most convenient place to live in if you're a student in DLSU. We see a lot of investors here buying bulk units to lease out to students as well. We also have Dragon 8 Shopping Center at the bottom right. That's right across the 168 shopping mall. It's a refined version of a Changi shopping mall. And it's very interesting because we actually have 600 parking slots, and it will be opening next month. So in case you want to do some shopping, you can safely park your car in our vicinity. We have also partnered in a 1.6 hectare commercial center in Binyan, Laguna, which is very close to the SLEX exit. That's Umbria Commercial Center, which is a very different design from your usual boxed malls. And here are other Iloilo projects. This is Injap Tower, our landmark in Iloilo. It's 21 stories high. It's currently the tallest building in Western Visayas. We also have the Uptown Place, which is across UP Iloilo. People's Condominium, which is our first project and also the first condominium project in Iloilo. At the bottom there we have First Homes and Happy Homes, which is our housing projects in Iloilo. First Homes is our higher end and Happy Homes is our affordable housing. And the only project that's not yet completed here is the Iloilo Guimaras Ferry Terminal, which is a joint venture with the Iloilo City government. So basically for 25 years, this is the exclusive ferry terminal that will service this particular leg. Some financial highlights. Now that you've heard a little bit about our strategy and our focus and of course some of our projects, here's just a little primer of how we are doing today as a company. As of the end of last year, DoubleDragon made $561 million in bottom line, up 360% from the previous year. Total revenues reached $1.2 billion, more than double the $500 million from the previous year. EBITDA almost quintupled to $816 million from only $165 million the previous year. We were able to raise $7.4 billion in 7-year corporate notes last October, giving us a healthy cash balance of over $3.8 billion as of the end of last year, despite the heavy CapEx program in rolling out all of our projects. And despite the additional debt, our financial leverage ratios even improved to 1.07 times debt to equity and 0.58 times net debt to equity, emphasizing solid financial strength for our company. Note that this is only just the beginning of what you'll be seeing in the next couple of years once we accomplish the things we've set out to do. By 2020, with the rollout of 100 city malls and the completion of DD Meridian Park, we project to be hitting bottom line of close to $4.8 billion, of which will be recurring income from property rentals. So now that I've given you an industry overview of our growth plans, I want to give you a general overview of my insights in raising financing for real estate projects in the Philippines. As young as you may think I am, I've been working in the real estate industry for close to 15 years now. Don't worry, I'm not that old. There's no magic serum that I put on my face. But I started working really young. I was fresh out of college at 17, initially with Ayala Land. Then many years later with Alpha Land as their group CFO. In my previous role as CFO, I raised about $200 million over various projects. I also arranged $220 million for our JV partner. All of this from local debt markets with property as collateral. So I guess you could say I know a little bit about financing real estate in the Philippines. So I guess I can say that we're extremely lucky to have so much liquidity within the local banking network that there's very little reason to be looking elsewhere for financing. As long as you have a solid reputation as a developer and a viable project which is not considered high risk by your lenders, I think you'll be doing okay. As an example, property developments that are focused in the office and retail segments are most likely to get more financing demand than those in the vertical residential market. Because there's fears today that there's an oversupply of residential condominiums in the market. Now, I'm not saying that raising financing in the Philippines is easy breezy. Admittedly, it has gotten harder in the recent years. And in the latest survey conducted by the BSP among senior loan officers of the banks, there has been an overall net tightening of credit standards for commercial real estate loans. And this is the 10th consecutive quarter that these results have been seen. Banks have been developing stricter oversight of real estate exposure with reduced tolerance for risk. This basically means that you're going to be seeing wider loan margins, reduced credit lines, stricter collateral requirements and loan covenants, as well as shorter loan terms. And for floating rates, you'll pretty much see a floor in every one of them. The BSP is definitely cranking down on real estate exposure of banks because of fears that real estate prices might shoot up, create this bubble that everybody's scared of, and once it bursts, God help us, may take the entire banking system with it. Despite all these tightening measures, though, latest available data show that bank systems exposure to the real estate sector increased about 24 to 25% year on year. Even investments in securities issued issued by real estate companies increased about 20% year on year. The Monetary Board recently approved a new policy to decrease the allowable values banks can take on as collateral for real estate to 60%. Today, banks can lend up to 90% and still be protected depending on the segment. Soon it will be 60% across all segments of real estate. This means that banks can continue to lend beyond these levels, but they would have to set aside additional provisioning, which means additional cost of lending, which means higher passed-on costs to the borrowers. Good news is, banks will be given maximum of 2 years to comply, so there's still time to secure real estate financing for yourself today. And they say that it's always better to end the talk with a quote from someone smarter than you. So here's one from Deepak Chopra. Instead of thinking outside of the box, get rid of the box. The reason I chose this quote is because times are changing. If we continue to produce the same old product, we can't expect to achieve better results. In fact, we should expect worse results as time passes. It is not nearly enough to produce a good project. There's so many good projects out there. Buyers have so many choices. It's up to you to differentiate yourself. So as a developer, or even as a producer of goods or services, you must ask yourself, how do you differentiate yourself? How are you changing the landscape of your industry? One of the core values of DoubleDragon is to embark only in projects that will endure the test of time and remain relevant for generations to come. We are not merely in development to make money. We strive to uplift lives, and we promote sustainable development through green technology. It's time we start thinking about the future that we are creating, not only for ourselves, but for our children. Thank you, ladies and gentlemen.
Very good. What did we tell you?